Hello, guys, and welcome to the 58th edition of the Trading Opportunities webinar. Let me check the mic segment. Okay, looks like everything is working here. So I'll wait a few seconds if somebody is going to join in. I know it was very short notice. Hello, guys. So if you can hear my voice and see the shared screen, do let me know in the comments. Otherwise, I'll just continue as at my end. At least it is working fine. What's that? Mm. Hello, Madhavji. How are you doing? Uh, so looks like everything is working here. Let's now, in that case, continue very quickly with our first of all disclaimer here on screen, suggesting that all content presented here is for educational purposes. I'm not soliciting buy, sell. If you go on to use the views for trading, investing, or any other purposes, you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the stuff you can read on screen, of course. And with that out of the way, let's have a quick introduction before we actually jump into the actual content. So guys, as you guys may already know, my name is Nirav and I'm the admin and owner of the website as well as the YouTube channel 50hours.com and the 50 hours market analysis handle, where the stream is currently being run live. We have been doing it for quite some time and this is the 58th iteration in this webinar series. Currently we are running it on Fridays at 2 p.m. GMT. So if you want to get this analysis live during market hours, you can join in at this time and post your questions as well as queries. Other than that, I'm also the author of the book Think with the Markets, available on Amazon's Kindle platform for instant access. Lastly, before we continue, here's the quick track record of my forecast accuracy over the years. For the 6 consecutive years, I've had 80% plus accuracy, which is above industry standards. And you can check the track sheet; it is publicly available for everybody to view. We have the dates of the instrument's name and the analysis, followed by the actual link of the instrument over here. Things that worked were given +1 and things that didn't work were given -1. So in this way, we have calculated the accuracies. 2021 we had 82.22, 2020 88.52, so on and so forth. 84.88, 84.61, and 87.5 and 83.37, 34, sorry. So with a quick introduction out of the way, let's now head over to the actual webinar. So I like to make it clear a little bit here that we are not going to cover too many currency pairs. I'm just going to stick with Euro USD, and then we'll move over to crude oil, gold, followed by S&P Nifty, and then at the end Bitcoin. I do, however, I'm planning to include bond in these discussions, or probably a separate discussion for it, but that remains to be seen. All right, so let's now head over with our first discussion on Euro USD. So last time when we were discussing this chart, these were the arrows that were drawn. I have not changed this chart. I have actually multiple charts of Euro USD itself. So this one is the one we were doing last time. So these were the arrows. I was thinking either it can go down and up first, as in what you call continuation for WXY in the other direction. So what we seem to be having here is something like this. And once this WY dot Y completes, we should be seeing the completion of the wave X. Now again, it can transpose to something else, but it seems to be pretty much following this count. So I'm just going to go along with it. Check one more thing quickly. Hmm. Okay, so Euro USD, what we are thinking over here is that it is either continuing inside a complex correction like this. Okay, so now let's just start from this point of reference so that everybody can get an idea of what we are doing here. So from this point of reference around the price level of 1.05317, I'm thinking that or assuming that we may be seeing a complex correction in the other direction, right? And it looks like we may have a direction like this. So this part, these first three legs is called W. This correction is called an X, which we think may still be continuing. And then we will expect three more legs like this for the Y, right? So with that, what seems to be the case is that the pullbacks may lead to buying opportunities. So if we see a pullback near the 1.083 level, we will look for buying. And in simpler terms, if we see a move above 1.09565 or near the last high, then we'll be looking for buying again. So in that case, we can look for swing longs in this counter, heading on as the market validates our view, or exiting if it does not. And the propagation should look like this. On the actual chart, we expect it to look like this. Of course, other possibilities are also there, and they may as well take place, but we are just going with the one which looks to be the most likely case as of now, right? Anytime the market does something out of the ordinary, which would be a move below 1.07471, we'll be on the lookout for it to take out the low of 1.06808. It basically we want it to see go lower than the support level. If it does that, then we'll change our shift to look for sell off instead of longs, right? Pretty straightforward if you ask me. But if you guys have any doubts or questions, you can just let me know. Otherwise, we'll move over to the chart of crude oil. And of course, if you are clear on whatever we are discussing, you can just type in clear or understood. And do keep in mind, guys, we have reduced our forex coverage to just Euro USD. So crude oil, WTI, crude oil. First of all, let's see what we were discussing last time. We were thinking that if the market remained below this trend line, this white trend line, then we may look for some selling opportunities. Now, of course, that does not seem to have happened. So that means we have established the low over here, right? We were covering this low since Long time, you can check any of the past webinars, 57, 6 or 5, 55, whatever webinar you check. We were counting that from the topmost part, we have a triple zigzag correction, which seems to have ended over here. So what does that lead us with? By the way, we did catch a long trade here because if the market sustained above this trend line, we were looking for longs, right? Of course, there was no exact level, but above the trend line generally means that if the price action remains above it and then retests it and then creates new highs and highs. So again, I'm not going to comment if you were able to capture it or not because we did not have any exact levels, but direction wise, we were right. And yes, forgot to check the comments there. Thank you for the confirmation, Madhavji. With that, let's now continue our discussion of crude. What I was saying was that we seem to be having one second. Yeah, we seem to be having an impulse in the other direction here, right? And with an impulse in the other direction, we basically mean that the market is currently in this third wave. So those of you new to Elliott Wave, I'll just start off from this point of reference around the price level of 64.20. We assume that it should look, or not we assume, this is the guideline that it should look something like this. The first leg is called a wave 1 up, wave 2 down. So we are currently in the wave 3 circle degree. And as you can see in the wave 3 circle degree, we will again have, actually I'm not very sure about this 3. It may still be continuing, but doesn't really matter because we still have one leg up remaining anyways, and its direction is also up. So yeah, as I was saying, since wave 3 circle is remaining and as per the fractal nature of Elliott wave, we should have again 5 waves inside the structure. See? Yep, there it is. So as per the fractal nature of Elliott wave, we will again have 5 waves inside of it, which we have labeled with a double bracket, right? And if this is the double bracket 3, then we expect new leg up, new leg up. So basically, long story short, we are looking for more upside on WTS crude oil if you are not already long, right? Do make sure to adjust your positions accordingly. And since we have at least 2 legs, it's a swing long trade here, right? Let me know if you guys have any questions or queries in this regard. Otherwise, we'll move over to the next chart of gold, which seems to have again worked out as we discussed in the last webinar. So let me just quickly head over to gold. Participation seems to be really low in today's webinar. So last time when we discussed this chart, we were of the view that this market is probably continuing itself sideways as a triangle pattern. Now in a triangle pattern, you generally expect the market to remain within the trend lines. This trend line, this white trend line, and this white trend line at the top. So it does seem to have done that, not precisely as we expect, but this one is sort of not that out of the ordinary. And the idea was that it will go up at the very minimum, take out the high of 2009 and touch the 2019 level. It has done both of those things, right? Above targets, there were many targets above it, but the most immediate was 2019. Right above it is 20,038. I do not know if we discussed this the last time, but it is the next target to the upside. So if the market is continuing up, it can go there. However, what seems to be the case is that at the very minimum, this market seemingly has completed the pattern, right? Because we can count a clear impulse in the other direction on this counter. Now that a clear impulse is already there, it is possible that this market has done the bare minimum. It will go down for a good uh, price level or ample enough time before we can get another buying opportunity. See, keep in mind the, by the way, this brings our tally of number of trades that are worth to 68. Yeah, as I was saying, since it has done the bare minimum, we cannot speculate on the upside without considering it as a good amount of risk. Although I still think it can go up, but as I said, a bigger pullback would not be out of the ordinary. It has done the bare minimum target, so it may be looking for a pullback to perhaps 1943 level or maybe lower. So two things exist here. We can, if we are already long, book partials, which we should have already done if we are following this count, and kept some position with trailing stop losses. If not, then we can either wait and watch for the market to go higher than the 2030 level, 2030 to the upside here. If it does that, we'll be interested in longs again. If not, then the market can continue lower, and then we will, what do you call, and then we'll reevaluate the situation if it continues lower for new long opportunities. As I said, below 1943 level. So again, gold worked out as expected. Wait and watch for now, unless you are carrying longs and holding partial positions with the trailing stops. Let's now head over to S&P's 500 quickly. So there it is. I already have it. So S&P's 500 is not clarifying its move. It is, if it's going downside, that is the case. If it's heading for upside movement, then we do seem to having enough evidence for it, and the final confirmation will be if the market sustains above this trend line. Those of you joining in for the first time or after quite some time, let me just tell you what we are looking for. So this is the 4-arch chart of S&P's 500. In the bearish scenario, we are looking for something like this. The market is forming a triangle pattern here, right? If it's forming a triangle pattern, then we expect the market to sustain within these trend lines, right? So it has already done that. It has just very recently tested the high of the trend line. It can little bit shoot up, but going higher than 4180 would be a confirmation that it is not a triangle, and most likely this market is in a uptrend, right? So one thing is very clear: 4180, 4184 actually, 4184 on this data feed is the actual price level we are looking for the upside confirmation, I should say, right? And as long as the market remains within this trend lines and moves lower and lower, we are still following the bearish count, which is not relegated as of now. So long story short, confirmation for longs is above the mentioned level. As far as the sell off is considered, again I have a analysis for that as well. Let me just quickly go to the 1 hour chart. I'll personally be looking for selling below this channel, right? So what I've done is, it's not required to be placed here. So what I've done is I've created an alert on the channel itself. So whenever the market goes below it, and most importantly sustains below it, and the best case scenario would be retest the channel and fails, we'll be looking for sell off. So this is how we expect the market to move. And if the downward movement continues as per this bearish count, then we expect the counter to go even below 3900, and in the better scenarios much lower. But we'll see as it goes. Currently this is the outlook. I think pretty clear for the upside as well as downside. So with that out of the way, let's now head over to our next chart. So Nifty, is this the one? Let me see quickly. Well, that should do. So Nifty, when we were discussing last time, we were of the view that this market is possibly in a impulse to the downward direction. And our view was that perhaps from this point of reference around the price level of 17,796, we have a wave one down, and we were expecting wave two up to end somewhere near 17436. Sorry. Yeah. So as it comes out, the market did take a very good sell off, but it didn't last. So the market did test the level. So the level was definitely important. Now the next level we are looking for is the price level around 17,006. Excuse me. The next level we are looking for is the 17,600 price level. The market is already there. It's not showing much or any sign of weakness thus far. So what remains to be seen is a good amount of sell off from here. If there is a clear sell off, at least taking out 17,520 to the downside, then we can say that maybe perhaps this count is correct. Maybe this is actually a wave two, and this market is going to go lower, right? As long as we do not see that kind of sell off, there is no clear evidence for the downside continuation. And as such, above 17,700, we ourselves will be looking for long. Confirmations are around 17,762. But as I said, above 17,700, it is a very solid long trading opportunity. So it seems, at least at this point in time. So long story short is, if we are looking for sell-off, we want to see the market go below 17,520. Above 17,700, it's long, and on an intraday basis, if the market closes or not closes, crosses above 17,637, then intraday short term, very short term basis, I myself will be looking for long. That is for intraday, not swing, by the way. So that's my quick view on Nifty before we head over to the BTC chart. So BTC is again kind of moving as expected here. We were in the discussion last time, and our view was that perhaps the wave 4 was complete. Let me just quickly check, when was that? 31st. So yeah, somewhere here we were expecting that perhaps the wave 4 was complete, or it might continue a little bit sideways or down. It looks like with this updated outlook that it is maybe continuing as a triangle, right? Do keep in mind it can continue as a complex as well, in which case it can go like this. So the possibility of it continuing a little bit lower is still not relegated, but the most clear scenario is the triangle one, because we'll be looking for longs, or confirmation of longs is about 29,134. Aggressive longs can be entered above this white trend line. However, on the contrary, if the market sustains below 27,265, basically below this low, then we will have to consider the possibility that it is continuing as a complex like this, in which case it will, or we expect it to go lower than 26,563, right? So as I said, above 29, actually whatever this high is, they are looking for longs, aggressive long entries. Just draw this trend line in on your charts, because this is the Bitstamp data feed. Your data feed may be different, leading to different prices. But on this data feed, prices about 28,680 are suggesting possible longs. So long story short, we see something like this, support or retest, then we look for longs. If we see the market go below this 27 to 65, whatever this low was, or basically below this trend line, then we hold our longs, or do not take longs basically, not hold. Do not take longs and instead wait for the market to do this complete correction, which is something which is going to look something like this. Right, so nothing much to add here on BTC. And before I leave, we will be continuing doing the webinars for the time being on Fridays at 2 p.m. GMT. If you want to join in live, you can join in live and on the YouTube, or if you are following me on Twitter, then I do post the links there as well as on the Facebook page. Let me just check one last thing very quickly. Gold, S&Ps, 100 and Nifty. Okay. So with that out of the way, I would say that we have discussed all the charts and I'll see you guys on the next webinar on Friday.